a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the hottest, the most popular ETFs of 2024. I can't believe the year is already coming to an end. So let me share my screen and talk about these hottest ETFs. So 2024 has been a blockbuster, an exceptional year for ETFs. And last week, flows into US listed ETFs surpassed $1 trillion for 2024. This is a new annual record, and this is way ahead of the earlier record of $903 billion, which was set in 2021. So apart from this flows record, we have seen many other milestones and records this year. Assets and US listed ETFs crossed $10 trillion in October, and it's a record year for new ETF launches as well. In general, ETFs have become the investment vehicle of choice for investors. And that is why mutual funds have been losing assets to ETFs at an unprecedented pace. So while ETFs have been gathering assets, mutual funds this year had net outflows of $270 billion. That is according to State Street numbers. And many providers are just responding by converting their mutual funds into ETFs or launching ETF clones of their mutual funds. And this year, low-cost core ETFs that provide exposure to popular indexes, they dominate the leaderboard in terms of flows. And the reasons are not difficult to understand because the S&P 500 index is up about 28%, and the NASDAQ 100 has surged 30% year to date. So investors have just been pouring money into ETFs that track these popular indexes. Now, another reason why US listed ETFs have been so popular is US exceptionalism. You must have heard about this a lot lately. And that is further amplified after the election. So US stocks have trounced international stocks over the past 10 years. So on this slide, I have the performance of the S&P 500 index and the index, MSCI index that tracks international stocks ex-US, excluding US. So the S&P 500 index is up more than 250% over the past 10 years. And the other ex-US index, that has returned just about 59%. So big gap in performance, and investors have noticed this difference, and that is why they have been favoring US stock ETFs. In fact, in November, 97% of equity inflows went into US equity ETFs. Investors are just ignoring international stocks now, and this is according to State Street data. Now, the Trump trade that sent stocks soaring, that further favors. It is expected that Trump's policies will favor US more, and that will be good for US stocks. And that is another reason why investors are favoring US stock ETFs now. Now, another reason for these blockbuster inflows is the launch of Bitcoin ETFs after wait of more than a decade. And there was so much pent-up demand for these ETFs that the assets in these spot Bitcoin ETFs have surpassed $110 billion. The iShares product, iShares Bitcoin ETF, that now has $51 billion in AUM. This made its debut in January and not even a year old. So this has become the most successful ETF launch ever. Then that space is seeing a lot of innovation. In fact, many of the new ETFs that are being launched are actively managed, and derivatives-based strategies have become quite popular, particularly among new ETFs, and these include leverage single stock ETFs as well as buffer ETFs and other option-based income ETFs. Leverage single stock ETFs were certain hot stock like those tracking NVIDIA, ETF like NVD, and or other hot stocks like MicroStrategy, which have become controversial now also. ETFs like MSTU and MSTX, they have seen a lot of traction. Now, top asset gainers this year, as I mentioned, these are core ETFs that track the popular indexes. Vanguard S&P 500 Index Fund that has gathered more than $100 billion this year to date, and earlier annual record was just less than 50 billion, I believe. Then the similar product by iShares that has gathered $65 billion. Bitcoin IBIT has gathered inflows of $33 billion. And that combined with the surge in Bitcoin prices, this has AUM of $51 billion, as I mentioned earlier. And the Invesco QQQ product has gathered $27 billion, and the Vanguard Total Market ETF, VTI, that has gathered $26 billion. So VTI provides exposure to all large cap, mid cap, small caps, all sorts of stocks, US listed stocks at an ultra low price. Now, since two of these ETFs track the S&P 500 index, let's take a look. Let's dig a little bit deeper into S&P 500 tracking ETFs, because I often get questions from our clients or even my friends, family members, that which is the best S&P 500 tracking ETF. So SPY is the most popular one. It's the oldest and the largest ETF in the world, $640 billion in assets, but this charges 9 basis points. There are 3 more ETFs that track the same index, the S&P 500 index. They will provide you the same exposure at a much lower cost. So, and IVV, they charge 3 basis points each, and this SPLG by State Street that charges just 2 basis points. So let's quickly take a look at these ETFs by going to the quote page on Zacks.com. So you can read our research report and articles on these ETFs, and using links you can go to external web pages for these ETFs and learn more. So you will see the holdings for the S&P 500 index ETF, SPY, dominated by the Mag 7. This is SPLG, which provides the same exposure, and it is now the cheapest ETF to provide exposure to the S&P 500 index. But there's not a lot of difference between expense ratios of VOOIBV and SPLG, just 1 basis points, which is $1 for $10,000 invested. Basically nothing, but there is difference between SPY expense ratio, which is 9 basis points, and the other 3. So this may matter over the longer term. As far as the Invesco QQ product is concerned, that is very popular with traders as well. But Invesco had launched this cheaper version of the QQQ ETF. So if you're a long-term investor, QQQM, which charges 15 basis points versus 20 for the QQQ ETF, that is better for you. And if you look at the portfolio, you will get an even more concentrated exposure to the Mag 7 stocks and the QQQ or QQQM ETF. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss any episode. And I'll see you next week.